Hi, Warriors. Everyone ready for the inflation number? What is it? The PCE, PPI, elemental P. Hi, Steve. How are you, Blake? No, I wasn't in Laguna. That's uh, my gay clone. Hi, Kman.
Morning, Dale. Morning, everybody. Hey, Dale,
How are
I
you?
looked up what you said there. You live in Encinitas, right?
Yeah,
And I
yeah.
see just below there, you must be living very close to Wales in the UK because I see you've got a Cardiff by the sea over there.
Oh, yeah, Cardiff. Yeah, used to
Yeah,
have an office there.
so
Yeah,
that's Wales.
I love that whole area. I mean,
yeah,
this is the best sleepy beach communities in Southern California is where Dale's
Really?
at right now at Encinitas and Cardiff and
yeah.
oh man.
Yeah, Solana Beach,
And
all of it.
Man chest
Delmar.
hair.
Oh yeah.
We call it man chest hair, get it? Instead of
Delmar, yeah.
Manchester.
Paul,
Anyway.
Paul Nash, you're a new handle. Welcome. Um, okay, we're chaps, so I know you're not from the US. Hello, hi Hugo. Okay, Brand, James. Okay, so let's get ready for the number. Let's prep everybody. And it's just the three musketeers, guys. Blake, me, and Kman. And
And
we're
tomorrow it
gonna,
might just be the two musketeers, which will be you
yeah,
and Kman.
that's gonna be a first.
Yeah.
So that'll be great to do. Think we could manage it.
Yeah,
So
just about, just
yeah,
about.
yeah. So Euro, when we start there, this moving average contained it. I would say looks pretty vulnerable if we take out this low here today, but who knows? Maybe it could pop one more time on the number. Besson really shows that he carries some weight in the global currency markets. I mean,
Yeah,
just a statement by him.
he's a man of many missions and many jobs. Now he's advisor to the Bank of Japan as well.
Oh gosh, so he's really in a rise of global power.
Yeah.
So a lot of targets are around 45. I thought we'd get to 49
Mm.
first, but and then could expect a rally. By then, I think that maybe I know everyone's convinced that rates are just going to go straight down, but once we get towards 410, which is the objective of this head and
Mm.
shoulders formation, I think that might be it for
Yeah.
lower rates and the bonds. They could get up towards 90. I saw Jim's chart. He still thinks this is an A, B, C for a four, which implies after this rally is over that we have five coming, which means, you know, challenging these lows. So there could be a great short setting up in TLT over the next couple of weeks. We'll see what happens. So, what are you thinking doing, Kate, this morning?
Um, you know what? I have not done an awful lot. I really haven't done an awful lot. You know why? I mean, we've seen this and we've talked about it. We could be in this range building thing, especially I'd say on euro, maybe even the yen. Because come on, I mean, we had this drop in the dollar yen, and but it's basically on the back of Besant. I think the short term too short yen they got a bit rinsed, but will it last? I mean, it's not because Besant. We know that the U.S. administration want the Bank of Japan to hike dollar yen lower, etc. But apart from washing out a few weak yen shorts, is it really going to continue? Is my question. So, I still think we're in kind of range building stuff, and we've got the PPI today. We've got the retail sales tomorrow. We've got the as Blake already mentioned as well. We've got the Michigan tomorrow. But then at the end of the day, we will have that famous Alaska summit as well. And by the
Yeah.
way, they put a time schedule on it. It's going to start 1930 GMT, which is an hour and a half between before the full closure of the markets, which is and there will be a press conference obviously afterwards, which risks coming right after the complete close of markets. And my question is, will this market have the guts to go into large positions before this summit happens? Because could have implications for quite a bit, and we are preparing a nice little weekend gap as well. So um, the data will move stuff, but I'm traveling very light, Dale, right now.
Yeah.
I'm really let the market
They're,
come to me.
yeah,
Uh,
historically they're comparing it to Yalta, which was after World War II, where they divided up the world and drew lines.
There are big decisions to be made, and
Yeah.
because there's not only a truce, but potentially ending, or and there will have to be a choice made on territory, and it's a big thing, but will we get any results is the other question, right? So Trump is already threatening to go very hard against Russia if nothing is decided on that first summit. So he's pumping up the event himself as well. Yeah, I think we are, and that's where I'm wondering if the market is really going to want to push the boat to one or the other side of the
Yeah.
of
But
more than ranges right now. So that's
okay.
why I'm a little light in position, and I take things as they really come. We had decent UK GDP numbers, bit of mixed bag elsewhere, but that's probably the reason why that is the reason, by the way, why sterling is still holding up relatively well. So I'm holding my small cable, small short euro sterling, but the euro sterling is rather a jobbing play because we are just on that 86, which is a pretty important level. It is the 38.2 of the last rally, and it is also halfway of the big 2023, 2020, end of 2024 decline. So it is an important level, that 86, the figure on the euro sterling. So I guess we need to really respect it. So even there, I'm not overly positioned either. No,
Yeah.
I'm
Yeah. So
taking it as it comes. And you know what? PPI, as Michael Brown uh, all again rightfully reminded us that in the PPI there's some stuff that is not even taken up. So it could be a bit of a volatile one, and having like this half an hour impact, and then that's it. Maybe you add the claims in there, but yeah.
isn't it something that we feel like we have to explain why we're not trading?
Um,
You know, there could be a myriad of reasons, and not having a position on is also a position.
the thing is, not having a position is giving you the luxury and the time to
Yeah.
let the market do what it does. But in the
Yeah.
meantime, we're still preparing for what is to
Yeah.
come. And
But
the thing
it's
is,
not illegal to be flat.
exactly. I mean, in some, but at some money managers and big asset managers, it is illegal to be flat.
Yeah,
But
that's right.
for us, it's not.
Yeah.
And not having a position, if you're not an intraday high frequency trader, is perfectly okay, and that doesn't mean we won't have a position in 1 or 2 hours.
Yeah, true. I mean, if you have like three good setups a week, for me, that's
Exactly,
that's enough.
exactly.
Sometimes there are none.
And
And
and yeah,
go ahead. Yeah.
absolutely, because you're talking about three good setups. Let's even go one step further. You have four setups, three good ones and one bad one. You still, well, hopefully you manage it well. They don't the risk, but and you still will have a half decent week. You don't have to
Hmm.
be in everything all the time.
I like this metaphor, and it's true that if you watch professional surfers, they don't try and catch every wave. they too wait for a setup. And that's exactly what they call it, you know. How the waves are the set, they call it a set. So it's the same thing. And they don't chase every wave. They wait for the kind that would have a nice peak, give them a good ride. So be a surfer, even if you would hit the bottom of the ocean once a wave breaks, which I did on multiple occasions and gave it up. Trading's dangerous enough for me. All right, so euro. This is pretty critical to me. Okay, because if we're going to break out and trade up towards 120, then there's no dollar bottom. The dollar is going to make a new low. So this is really a key area in my work that if it doesn't dig in its heels here, some people are going to give it like 97.10. It depends which Dixie you use, but I mean this is important. So they got the people who bought the initial break, shook them out. Okay, they're probably still out. So if they could reclaim old support, new resistance back above 98, that'll be your first sign that it's
Yeah.
turning good. So
And,
it
and I
looks
think
like it could be a wedge, right?
it
Some
could
kind of
coincide. There's that 116, 50, 65, and
yeah,
that that could be the one. But even so, if you look at the euro dollar, I was saying this morning on the flow show and on the and when I was updating the stuff as well, we could just be 116, 117 and a half for a while as well. Because the 117 and a half and just above there is pretty important, and
yeah,
it's left untested as well. So yeah, it's still I'm still pretty, let's say, confident, and is maybe the wrong word, but what I was thinking about, like we did the bottom there in just under 115, didn't last. Now,
yeah,
is there really enough power to go and retest those high 117s, 118s? Maybe not. And what is happening is kind of coming towards what I'm thinking about those ranges, and yeah, I think it's still possible that we enter those ranges, which is a tradable range, huh? If we
yeah.
confirm either side of it.
So just in case you don't know, sometimes this is a pretty good correlation to watch for the dollar. So look at the formation, pretty similar between that and the gold silver ratio. You had your rally, you had like a wedge coming back, and you have the same thing happening in gold silver ratio right here. Potential higher low, and if it could get going, this is usually moves with the dollar, which it has in the last couple of weeks, but holding support. So
Mm.
just something else you could watch when you're watching the dollar. It's not
Yeah,
a
and watch
90.
that
Well,
gold is also now trying to well, it's also in a bit of that range between
yeah.
33, 30, 40, and 33 three quarters, and I think that's one that is going to be on the move next week after that summit. Whatever happens,
Oh,
whether
yeah.
it's lower or higher, I think gold is on the move next week.
Okay. All right. So risk. So I was talking a little bit about NVIDIA, which Blake says the earnings are a couple weeks away, and just talking about how, to me, this looks like a magician levitating something. It's not really, I don't see anything impulsive all the way up. Okay. I mean, maybe this was, but most of it has been, orderly. But I mean, look, little dots for daily ranges, and we're only a day away from one bad candle changing the whole picture. So here's the 4 hour. Check this out at recent highs, and this is the first time, even going back to when it sold off. Um, it was confirming, okay, and this time, look at that. So you have two lower highs in the RSI. Be careful with NVIDIA. And NVIDIA, I think as NVIDIA goes, the whole market will go. So it's number one. Blake, you showed that slide, I believe, as far as valuations and or percentage of the index. I think that was the slide. So watching a video, if you're an S&P, NASDAQ trader, Mag 7 trader, that's the one to watch. So we're challenging the 9 day right here. There's nothing until the 50-day here at 160 if we take it out. And so that's what I would be careful with. Uber looks worse. I mean, it's maybe forming a complex right shoulder or something. I thought I had it going last Friday, but we've bounced a little bit this week. But compared to the bounces we've had in indexes going to new highs, I call this an underperformer. This is probably more typical of what's happening in the market, with the market making new highs. Fewer and fewer are making new highs. That's why, everyone says the market has bad breath, not, halitosis, but the number of stocks confirming the moves at new highs. So that's what I have. Kman, what's the expectation for the number today?
Oh, the expectation we should go. I mean, on the claims, it should be all relatively stable. Maybe the continuing claims ticking up just slightly. And we're expecting the year-on-year PPI to come in at around 2.5%, 0.2 on the month-on-month. But again, I mean, to me, it's a tad volatile and maybe not the right indicator to really put on top of our watch list right now. But it can always create a bit of an algo blip, obviously, right?
Yeah. So, the reason I think this is important is that if it doesn't break out, I think there's a pretty big correction coming, maybe 110, which if you do fibs from
Whoa.
here, go ahead, Blake.
No, I was gonna say, whoa, that's a
Oh,
big call. I'd like
yeah.
it. I'm short, so wait, no, I'm not.
Well,
Never
just
mind.
simple
Forget that.
arithmetic. What was this? 118, 114. That's four. Take out 114, gives you 110. And I wouldn't be surprised that I don't have the fibs up here. If you did the fibs from 102 to 118, that's 16. So 8 back is 110. Halfway back is 110. And then
Uh,
then the dollar sinks again,
yeah.
towards 80 in the
Well, well,
82, 85.
well, okay, and then what, but just since you're doing fibs in your head, I just threw them up really quick. 112, which is the 38% retracement, which is also the breakout point from August of 2024. So
That's a
I mean
stopping point. Yeah.
that might be a really good stopping point, especially, if you think about how many people are just buying euros and how many people have plowed into euros in
Yeah.
recent months. I mean, remember when you're talking real money accounts and sovereign accounts, it's not a oh they're looking for they're out there looking for 200 pip moves. I mean, they're positioning themselves for a euro 130 to 140 in the next 2 years type of move.
Right.
They'll be buying on dips down to 112. So
Yeah.
if it is like if that move is significant and we are building on something that's going to last for the next year or two, they will be buying down at 112. I would assume anyway.
Yeah. I think you're right. And, this is just, I think an inflection point. And what I've
Mhm.
noticed on X is that, when I tweet something bullish about the dollar or bearish about the euro, people agree with the call, but they say not yet. So that
Yeah,
tells me a lot of people are waiting for 120 to sell the euro.
it's funny, Dale. I know, because we have some people that follow us. I mean, I've obviously, and you, I mean, you and I mean, you're one of the first people I met on Twitter, actually, believe it or not. And I actually remember the day that I started chatting with you. I was actually in, MB Trading's office, and I remember actually the office setup with I had we were running the Wise Trade MB trading chat room at the time,
Yeah.
And actually, I was in the chat with Forex Live before they went on social media, way back in the day, back when Jamie
Yeah.
Coleman used to run it from
Oh,
Reuters.
Jamie. Yeah.
Yeah, but way back in the day.
Yeah.
Anyway, I remember, I mean, we've been on for that long. Sorry, I started going down memory lane really quick. Um, we've been following each other for so long.
I
We've been on
probably
social media.
invited you for an interview on X
You did
because
on FX Street.
that's
I
how
mean,
that's how I built the guest book was off X.
yeah,
So
we were chatting before then. We chatted a while before then,
okay.
before you actually invited me. But anyway,
Yeah.
regardless, the one thing about being on social media for so long is I get a good retail reading from it.
Yeah.
So,
Yeah.
I can tell when I post something, like I'll post an idea, like a big idea, what I think is a big idea, and I probe it social media for likes and retweets, because if I post something and I think it's within consensus and I'm
Yeah.
getting a bunch of likes and retweets and
Yeah.
comments, I know I'm like, oh shit, I got to be really careful with
Yeah.
this. You know, I
It
do it
is.
for, yeah, I mean,
It's a great read.
yeah, it is.
And you wouldn't believe any time I put out a sell in gold, and I know it's been in a range, and you could be trading both sides of the range, right?
Yeah,
But anytime there's any intonation of bearishness in gold or
yeah.
silver, I get huge pushback right now. Oh,
So
you've
yeah,
been
well,
wrong. You're still wrong. You'll always be wrong. Your cock's up. You're wrong about this and that and
it's funny.
anyway. Yeah.
It's funny. It's funny. Hey, real quick, I just want to show you what I was referencing. When you talk fibs and you're like, oh, 110's 50% back. It is, and actually 110 would actually take us back to retest the triangle breakout point, which doesn't mean that it can't happen. I mean, it's
Yeah,
clear,
could happen.
it's entirely possible. Yeah, you got the 200 DMA right there. If the dollar just came out of its shoes and really started to rally. But again, the 112 level, as you can see here, is the big breakout point from 2024. You can see it right there. It's in purple or lavender or whatever you want to call it. That's the
And
38%.
look at where your blue trend line comes in, 110.
Yeah,
Another breakout line.
that's what I
Yeah,
was saying, Dale. It's the big triangle breakout line
yeah,
comes at the 200 DMA at the 50% retracement
yeah.
in the event that the dollar really comes unglued. Now, and what could drive that? I mean, you have to start getting creative and you're thinking on what could actually put, the dollar in that type of driver's seat. I don't know what it is at this point.
Hmm.
But
I
what I gotta say is we've been talking about that this week, or I've been mentioning it. Besson he is literally doing a road show every freaking day. That
He is
guy,
the
I,
public
I'm
relations. He's the
I
public
know
relation manager of the United States.
Yeah,
he is
investor relations. You're right.
he is I know he's the biggest bond salesman in the world and blah blah blah. But man, he is. I mean, I think he's starting
He's
to
been on
like
it
what
again.
he I was just gonna say, I think he's really starting to like what I mean, like hearing himself also too on top of it. So I don't know. What do you
He's like us.
He's
Yeah,
actually on it right now.
yeah, I mean he's blabbering all over the place right at the moment. But what
Yeah.
were you saying, Kay?
No, I said he's actually on it right now. No,
Oh yeah.
he just wants to be involved in everything. I mean, if you look at how he was talking about, well, the Fed is one thing we know about the U.S. administration, but then yesterday the Bank of Japan telling them what to do was a bit much, I thought.
Yeah, you think it's a bit of an overreach? I think it is. I mean, the
Yeah,
guy, like I said, he's in the spotlight, and I've watched people. I mean, everybody has seen this. I mean, when you put somebody in the spotlight, and then they get comments like, "Oh, he's the only adult in the room." I mean, next thing you know, and he just likes hearing himself now, and he's on a road show, and he's constantly talking and thinking he's the smartest guy in the room and the biggest voice in the Trump administration aside from Donald Trump. I mean, he's going to run with it, and he is right now. I mean, I personally am getting a little tired of his constant overreach into different areas that I mean,
Yeah.
you don't remember hearing well, Mnuchin's a you know,
Yeah,
I'll just I'll keep it at
Mm,
that. Uh you take Tiny Tim Geithner. I mean, you heard from that guy like literally once every once a month if you were lucky.
yeah.
I mean, I know
Yeah,
Besson's got a big job, but you know,
yeah,
we got a lot of debt to slop out there, but it's kind of wild, isn't
mm.
it?
Yeah, Yoda Yellen was a bit more vocal at the end, but she didn't overreach like he's doing. Because
No,
now he's busy. Now he's talking about everything again: China,
yeah.
crypto. Then again a bit of the Fed. And then tariff revenues. And you were asking about what could put the dollar back in the driver's seat. Well, we've been talking about it a bit earlier as well. I mean weeks or even a month or so ago, is if the U.S. data continue to surprise us to the top side. Imagine that everything holds up, that job market doesn't fall out of bed completely, that you guys continue to put GDP growth, and that the tariffs actually bring in a lot of money into the coffers. That could be a mix that towards maybe start of Q4 or a bit later that the dollar all of a sudden could get back into the driver's seat. But it's going to take a bit of time, in my opinion.
Yeah. So Ibrahim asked about the Aussie. I think it's in a rising channel. You can see it right here on Forex Analytics. You can read the intraday update that just came out a little bit ago. I mean, we got some false breakouts above the 618. The jobs data in Asian trade, the Aussie actually was pretty firm following the data because I think the market was like, okay, it's not as bad as it could have been. It was pretty much in line with well, it was in line with expectations. But the Aussie really started to pull back in European trade, and you're at a bit of a risk if you break 65 cents. So as far as the Aussie goes, it's not looking great. And just also keep in mind with the Aussie, I'm gonna show you guys something real. If you remember, they just cut rates, and they're not exactly hawkish at this point in time. Take this long-term weekly trend line. It goes all the way back to 2013. We basically came up to it today or last night. I mean, we came within striking distance. I mean, we're within 100 pips of that trend line, however you want to draw it. So there are when you think of copper shit in the bed, right as I'm speaking right now, copper is breaking down. So you got copper breaking down. You got an Aussie that fails to rally with risk as stocks are at all-time highs. You're up at a 12-year resistance. Why not be short Aussies right here? Now, I'm not short Aussies, but I'm just saying if you are an Aussie trader, why not be short and risk 100 pips to make three, four, 500 to the downside? So I understand why anybody who's long Aussie dollars is nervous at these levels. Now, if you wanted to be a buyer, down here at 64 cents or 64.50 made sense, but up towards 66 cents doesn't make a lot of sense to me from a risk reward perspective. So,
I think if you're patient, you want to buy that Aussie, you'll be able to buy it with a 62 or something handle.
yeah,
So
I mean, I don't think that's unachievable.
about
Again,
halfway back, you
and
have it on
and
your chart.
and you think about like, copper looks like crap now. You got risk that we're about ready to complete. If we not haven't completed wave five, we're about ready to in the S&P,
Yeah.
which could be a significant top going into this fall. Hey, we have initial jobless claims and PPI coming out in less than a minute. So let me go ahead and get us all ready for that. I'm going to put us back on live squawk over here on Forex Analytics. I'm going to grab our three charts. We have yields in the middle, S&P to the right, and we're going to put the dollar index right here to the left. How much time do I got? How much time? Shit. Uh,
You've got 10 seconds.
Damn it, I do. You're right. 15-second chart or 15-minute chart. Let's move that out of the way. Let's put over data flash right here. All right, guys, heads up. Here comes the data. Let's see what we get.
Good job, Blake.
Thank you.
Under
Thank you.
pressure.
Strong data. I mean,
A bit
look at
higher.
the
Oh, actually, quite a bit higher.
Ooh, the dollar is
Quite
moving.
a
Oh
bit
shit,
higher.
stocks do not like that. Remember, producer inflation, it feeds into the consumer eventually at some point. So,
Yeah.
um,
Okay. Be careful with NVIDIA today, guys.
ooh, yeah. You got to, man, look at stocks are getting absolutely smoked right now.
Yeah. And this is very confirming to me in the dollar. Okay. So now we're back above some of that old resistance, new support. If it sticks, I think we're on our way to 102 in Dixie.
All
Or
right.
sometime into, September, and then the big dollar break. I know a lot of people are thinking this is the low. I'm still treating it as a bear market rally from the high of 110 to the recent low at 96. So about halfway back is what I'm looking for. Just call me
Nice.
WD Gann.
WD Gann, it is.
Buy and sell 50% retracements. That's what he did. He didn't
Well,
mess with that 61.8 and 38.2 and that kind of stuff. Just 50%.
50%. All right. Hey,
Like, look,
just FYI, I'm gonna be scaling out of some of my dollars ahead of my trip. But I just want to say, guys, good luck. Enjoy your time with Dale and well, actually, we have Dale Briscoe as an interview right now.
yeah,
Did you
he
find him,
won't
Dale?
accept another guy who doesn't like to be promoted. Oh, here now he's coming over.
He's coming over.
Yeah,
I always enjoy hearing Dale. He's a good money manager, really good money manager from the UK. He's popping in here in just a second. So enjoy your
he's
time with
here.
Dale, but enjoy your time with Dale and Kman tomorrow. Remember the Flow Show will be on tomorrow, and so we'll face these two guys. We'll have you covered. Sorry, I'll be traveling, dropping off my kid to college. My youngest is off to college, so. If there's any time for a Black Friday, it'll probably happen while I'm gone. So be aware
Where's
of
he
that.
going, Blake? Where's he
Ole
going?
Miss.
Oh my
He's
God.
gonna be a running rebel.
Oh man,
I
he's gonna
know.
have a great time with the
Oh yeah,
Southern Belles.
I
But he's
know he's
got a girlfriend, doesn't he? Or that's the
yeah,
other one.
and she's going to Ole Miss too. So yeah, it's
Oh, they'll be married. Okay.
yeah.
All right. All right.
Her
Yeah.
dad's the old
Yeah.
old FX desk head at
Yeah.
Morgan, so
Yeah.
Morgan Stanley.
I know you'll
So
welcome her. You and your wife will welcome her with open arms to the
oh, we love
family.
her. She will.
Yeah.
We'll take that family. That family. We're just keeping it in the Forex family by doing so.
Everyone
Yeah,
wants their kids to marry up, Blake.
that's right. That's
Marry
right.
up.
Hey,
You
marry up,
know?
baby. Hey,
Yeah. All
no,
right.
but seriously, guys, really be careful. K-Man talked about it. We have a big, Putin, Trump, summit. Traders are going to be treading lightly going into that. So just be real careful
Yeah.
about too aggressive, right, Kay?
Yeah, and the thing is as well, closing positions left, right, and center can also cause a bit of unexpected, not unexpected, but a bit of a random volatility as well into the weekend. So what you see is maybe not what you're going to get afterwards. So be a bit careful with the yo-yo, as I call it.
Great point. I know myself. I'm gonna be reducing positions actually as we speak, heading
Yeah,
into the
thought of it
news.
too.
So, yep. All
Well,
right,
great
guys.
job. Great job this week, Blake, once again. Have a safe trip and take pictures of his dorm room
Thank you,
for
sir. We'll
so I
do.
can reminisce.
I will.
Those
I'll
were
do that. You guys know I'm Asian. I'll be snapping
those
all.
were the best. Yeah, those were the best years of my life. I didn't carefree. I didn't have to worry about money or anything
Right,
like
right,
that. It was
right.
just, anyway, gosh, I wish I had a time machine. Anyway, I'm jealous of your son and have a great trip down there and come back safely. Okay.
Thank you,
All
sir.
right.
All right.
All
You
right,
guys have a
buddy.
great one.
All right. Thanks, Kay. See you tomorrow, buddy.
Yeah, see you tomorrow, Dale. We are going to put on a real Friday show, mate, tomorrow.
Okay, we will.
Thank you, Coach.
All right, see you, Kman. Dale Briscoe, my trading warrior brother. How are you, Dale?
Good morning or good afternoon, wherever you are.
Yeah, well, it's morning at 5:35 a.m. and
Yes, I forget
it's only me
forget
in
you're on
the
the West
house.
Coast. Yeah,
Yeah.
yeah, yeah.
So, did you hear my commentary on the dollar? I know I got an email from you, I don't know, a couple of weeks ago talking about the possibility, but it still had to confirm, and then we got up to that 99 level or so and had a pretty big down day. To me, this area is very important for either count, for it to be good. I think we have to hold around here and start, making some upside progress, or else we're going to go down and make one more new low for a third drive on the daily. So, where's your head at on the dollar, buddy?
Yes, I concur with what you've said, and I think I emailed you and Blake and Stelios
Yeah,
on the 1st of July
right,
when that was the day of the low, and I said this could be the low, right?
right.
But it needs confirmation. And then I subsequently, I think, emailed you again a couple of weeks ago saying, yeah, the jury is still out. It had a decent bounce, but the jury is still out. So maybe what I can do is share my screen. Hold on. Can you see that, Dale?
And that was last time you were on about 3 months ago. You thought it was all clear and the market was going to head higher. Nice
Yep.
call, Dale. Nice
Thank,
call.
thank, thank you. Can you see my screen, Dale?
Yeah, got it. U.S. leading economic
Indicators.
index.
Yeah,
Yeah.
exactly. Sorry, I've got a billion alerts going off on my computer because the market's moving around. So I apologize if you get any squealing and beeping in your
I,
ear.
yeah, we don't hear a thing.
Okay, cool. So I think we're at a very interesting uh, juncture in markets right now. And the reason why I say that, and I definitely will cover the dollar in a short while. The reason I say that is that there is obviously a lot of external pressure on the Fed to cut rates. And I think this is a dangerous area for us to be in right now. I think my long held view over the last 4 or 5 years is we have seen a generational low in inflation, and that over the next 10,
Right.
20 years, we're going to see substantially higher inflation. And everything that I see right now still leads me to believe that the inflation problem or potential problem is still a much bigger problem than growth or unemployment. I know the Fed has a dual mandate, and it's getting pressure from the powers that be in terms of jobs and growth. But there's also the other side of the equation, which is the inflation. So look, the economy is absolutely fine. I don't see any major stumbling blocks for the economy right now. Everything that I look at, economic index, this is the GDP. Okay, it's come off a little bit, but it's still around 2%, no big deal. Unemployment rate, yeah, it's ticked up a little bit, but come on, it's still very, very low on a historic basis. So I don't get it. I don't get the nervousness and the need or the desire by Scott Bessent calling for 150 basis points of rate cuts. It doesn't make any sense to me, especially when you look at CPI, which is, this is my favorite chart, as you know. CPI was significantly higher in the 70s when we had an inflation problem. We had the COVID blip, and we had a pullback in inflation since then, which is kind of washing itself out of the system. But it's based again at around 2.5%, which is kind of my bedrock. And it looks to me like over coming months and quarters, inflation is going to pick up again. So I'm
Do you,
scratching
do you,
my head.
do
Go
you
ahead.
think today's number takes, um, you know, uh, some of the dot plots or a September cut off the table?
Look, I think that from where I sit, I think they should be. I think they should be very careful
Raising. Should they be raising rates here?
I don't think they should be raising rates right now. I think you need to see probably a couple more months of higher inflation numbers coming in, and then I think that they need to start thinking about that. If inflation doesn't pick up, and let's say the economy does weaken, as some economists are forecasting, then maybe they should be cutting rates. I think they are going to cut rates because I think the market pressure and the political pressure on the Fed to do so is now substantially higher than it was, a couple of months ago. So, so I think they will, but I think it's, as I've said all along, I think it's a mistake because you're just causing problems for yourself further down the road. And those problems could be substantial. So with that in mind, on the market side of things, yeah, I hear what you say about rates, and this is my long-term view on rates. As you probably know, I'm looking for higher rates in the future. We're still in, I believe, a wave 4, or finishing up a wave 4 in US 10-year yields. So we might get one more tick down to, I don't know, 405, 410, somewhere below 420. But we may have made a low already.
Today,
Well, no, not even today. I think it was, when was it?
A week ago.
Yeah, a week ago, something like that. Look, there's scope for a little bit lower, but the risk reward is that rates go substantially higher over coming quarters, is my guess. And as far as risk assets are concerned, there's nothing here that causes me to think that risk assets are going to fall out of bed. Yes, you might get some shakeouts, but as I said, last couple of times I've been on, I think the sales are set fair, right? So here's TLT against junk bonds. Below sort of 1.1 is risk on, and above that line is risk off. We're still in a risk on mode as far as I'm concerned, and have been for a number of quarters.
So what you're describing would be ongoing disintermediation like we had in 87 with rates going up and the market going up until we got to, an inflection point where the rubber band snapped.
Yeah, look, if in a world of stable or increasing inflation, you have to be investing in risk assets because of the inflation type nature of their hedge. So equities, metals, crypto, anything that's a risk asset. If easy money is coming, meaning the Fed are going to be cutting rates, global money supply is already at a super elevated level, which is why we've had risk asset markets going higher for the last couple of years. Global M2 is super high and still headed up. So that's backing all the rises in risk assets, equities, commodities, metals, crypto, everything. And I'm looking at this is the VIX, right? This is the VIX, and the VIX to me still looks like it's headed lower. I mean, it's already at a very low level compared to different periods in history going back, but it's still headed lower on a short-term basis over the coming next number of weeks, is my guess. So what does that mean for risk assets? Well, here's your S&P. Nothing in this chart suggests bearishness or the market's going to fall out of bed to me. It might do, and I think you were getting to a period now where there is a risk, a growing risk. You're making new all-time highs every day. I think there's scope potentially up to, I don't know.
Where's that line come in?
About 6.5, 6.6, something like that. And then you might get a pull back to, I don't know, 6, 5.5, 6. I don't see it going to 4 or 4.5 or wherever it is. I see many forus on the internet predicting, calamity and we're going to 0 or whatever the number is. But I don't see it. I don't see it. And you can't be short this market. If you've been trying to short this market, you've been absolutely decimated. So there's nothing there that signals weakness to me at the moment.
You still like the NVIDIA chart?
Yes,
All
still, I
right,
think we're getting to an interesting point. This is
okay.
interesting. This is what some people are now referring to as the Mag 10, right? Which is the Mag 7 plus Oracle plus Broadcom plus Palantir. And this has been driving most of the gains in the indices since the April lows.
Right.
Those 10
It's the same game.
stocks,
Yeah.
those 10 stocks have more than doubled. More than doubled. Think about that. The size of those stocks and the fact that they're up over 100% in 3-4 months, right? You cannot fight that. And you're crazy if you think that you can. Yes, it's going to correct at some point, and I think we might have, I don't know, another 5-6% of upside. And I'm very cautious now, so I'm definitely not adding positions. And if we get some spikes, I'll probably be taking some risk off the table, and I certainly would be considering buying some downside protection, given the fact the volatility is very low. So if you want to buy, 3-4 month protection on the downside, either puts or put spreads, something like that, then I think that makes some sense because you've made a lot of money in the last 4 months. Spend some of it and buy some protection. So, but otherwise, if you're in the cash markets, I don't think you can fight it.
What do you make out of the huge outperformance of Russell this week and last week? People have been looking for this to occur for a long time, for the Russell to really come to life. Some people were even talking about a double before we peak. So is this a change in leadership now?
It's about five. You're about 5 slides away from that. You're preempting what I'm going to talk about. Let me. It's a very good. It's a very good topic. Let me come on to it. So as far as I can see, No, that's fine. I'm glad we're thinking along the same lines and about the same things. So semiconductors to me still look like
the leader.
they're driving the market. So that's semis against the SPY. This is semis against XLK, which is semis against tech, basically. So semis still look stronger than tech in general.
Yeah.
Here's your NVIDIA chart. Yes, it's overextended, but you can't fight it at the moment. And here's another semi, AMD.
It looks better.
Super bullish, hasn't made new all-time highs yet, but it's very strong. And that's what's that? That's like that's over 100% since the lows as well. Now, you're talking about the Russell. This is what I find kind of interesting. The Russell, the small caps in general, have underperformed abysmally for many, many, many years. Many, many years. And I've been a proponent of being short of small caps and long of other stuff generally. And you can go back a long period of time, right? So it was basically 25 years ago when small caps, so in the dot-com boom, small caps had their after the dot-com boom, small caps had their day. This, to me, is very interesting now. The way I'm looking at this is that over the last 4 years since we got the sell-off after COVID, we've now completed or almost completed a structure on the way up where NASDAQ has outperformed small. So basically big cap tech has outperformed small caps significantly, obviously. But it looks to me as though it's nearing completion. And if I look at the RSI, it looks like it's diverging to me on these new highs. So that suggests to me that small caps could be due some kind of relative outperformance, and
therefore hold up better on declines and outperform on up days.
Yeah, and I think that makes sense. If the Fed are going to cut rates, which I think is a mistake, given where markets are, given where inflation is, I think it's a mistake and it's going to cause problems down the road. But if they are going to cut rates, I think then the higher beta names and the smaller cap names could benefit. So the small caps, IWM, this is a very interesting chart, right? You've got your inverse head and shoulders here, which targets 248 on the Russell on the IWM, which is, what's that, 15, 16 points away. So it's about 7% away. So to me, I think there's at least another 7 or 8% upside in IWM, and it could outperform the rest of the market. So yeah, I think small caps as a whole could be an interesting place to start looking, but you have to be very selective, obviously, because within the small cap space there is a lot of dross. There's a lot of duds, a lot of non-profitable companies, a lot of companies that I wouldn't touch with a 10-foot pole, but you might be able to find some interesting names in them, or just buy the index if you want to buy the index. And the other thing that is interesting to me is if I look at the percentage of stocks above the 200-day moving average, this looks like it's headed higher. And that to me also makes sense in terms of the broader indices, and some of the indices that, and stocks that haven't taken part in this huge market rally could now also start to perform. So I think you could see this number growing, and you could start to see more and more stocks, having a positive bias. So there's no clear indication to me that you should be shorting stocks at these levels, even though they are looking stretched on a valuation basis. But valuations can stay stretched for a long time, right?
Talking about stretch, I won't bring up cannabis, but I will bring up GDX. The shares have really been outperforming the bullion, which is the opposite of what it was the prior, before a year, 6 months ago or so.
It's always a good sign. It's always a good sign. And that was my next slide. So
oh my God.
Are you sure you haven't been cheating? Have you been
I have a hidden webcam in your office.
Yeah, exactly. So here's
great
gold.
Great minds, Dale. Let's just leave it like that.
Here's gold. Here's
Yeah.
gold. It looks like it's completed a fourth wave triangle to me, in which case we should be headed higher. So
higher dollar, higher gold.
No, I think I'll come on to the dollar in a second. My opinion on the dollar is that we didn't fully escape from the woods since the beginning of July.
Right.
I called the low, and I thought that could have been it, but we needed confirmation. And I'll come on to that in a minute because I don't think we've had confirmation. So I think gold goes higher, and I think the dollar goes lower. But anyway,
could we everyone's calling that, if you go back to gold, and I've asked everyone, go back to that gold chart. Everyone's saying that's consolidation. How do you know it's not distribution?
Could be distribution. But
and we break down under the bottom yellow line.
You could, but if you look at, I always use the longer term moving averages as a guide to where the market's heading, and the moving average is still trending higher. So I think that signals that we're still in an uptrend by and large. Okay, you don't mortgage your house and sell your grandma and go 10 times levered gold, right? Because it may pull back. But if you are allocating your capital in a sensible fashion, you have to have some money allocated to gold. So
I like your dotted horizontal line. So 3,200 is a number a lot of people have bandied about. That would still make it a triangle, but make it a flat instead of a symmetrical triangle like you have it.
Look, if we get back down to 3,200, I'm going to be selling out of some of the stuff in my portfolio and buying more gold. I think that's a no-brainer at that point, because I do see it substantially higher.
Okay, then after you do that and it goes to 29.20, what are you going to do? Buy more?
Yeah.
Okay. All right.
Yeah.
So there's conviction.
Don't forget, my time frames are probably quite a bit longer than many of the people that
Oh, you don't trade off a tick chart?
What's a tick chart?
She just shows every tick.
It sounds interesting.
It's like a sec. It's for people that think 15-minute charts a little bit too macro.
I know. I was being flippant. I know what a tick chart is. I used to be a prop trader. So so here's your gold silver, and that still looks like it's headed lower to me, which is silver relative strength, and that usually is a sign that metals in general are going to perform well.
Yeah,
and
it is.
And And here's your GDX, right? Your GDX is now within touching distance of, its all-time highs going back to 2011. So we're within 10%, and that for me, still looks like it's headed higher. And there's no reason for me to believe otherwise. I still have a bunch of miners in the portfolio, and they've done well. We had a shakeout earlier in the year, but we're still invested. There's still a core allocation in the portfolio, and I don't see any reason to change that. Now, just coming on to your point about the dollar, right? Okay, I think this is where I messaged you, I think, on the 1st of July.
Yeah.
At the low, and I said we may have seen the low, right?
Right.
And quite often, it's interesting because having been in the markets for too many decades to remember, I'm always fascinated by the fact that turning points, macro turning points in markets, quite often gravitate towards quarter ends or half year ends or year ends. It's surprisingly, statistically, it's a statistically significant number of events that lead me to believe that it's more common than it should be. And I said to you, we may have reached the bottom, also because we'd reached the bottom of this channel. Obviously, I've taken the
That's what amazes me still is when markets react to my lines. I draw them there because I think they'll react, and then when they react, I'm still surprised. So what's confirmation for you? Back over the high from a week or so ago? What was that, about 100? Would that do it?
I think that okay, this movement since the beginning of July to me looks like three waves.
ABC,
ABC. Right. And if that is an ABC, then
we got 94 coming.
We've got lower to go. So I think the jury's out. But what convinces me even more is the fact that if I look on a very short-term basis at the euro, for instance, and I look at the move since the move since the 1st of July was three waves down, A, B, C. So to me, that's just a correction, which suggests that the trend is still up. And then if I look at the move since the beginning of August, I can count five ways there. 1, 2, 3, 4, 5. So that almost looks like a perfect five-way structure, which suggests to me that the trend for the euro is still higher. So we may get a pullback over coming days to 115, 115 and a half, that sort of area. But then see how the price action is, and it wouldn't surprise me if we get, further upside for the euro, further downside for the dollar. So look, I think, as I said, I think the jury was still out. That could have been the low on the 1st of July. And I said, we need confirmation. And the confirmation would have been a significant, very quick, very significant move upwards. What did we get? We got like 3%. That's nothing in the whole scheme of things. And it was in three waves. So I'm yet to be convinced by the dollar.
Well, we have this, if it holds here, this is the second higher low. So we'll see. I think for your case, for a new low, you have to take out the first higher low. I think that was 97.10 or something like that.
It sounds about right. About 97.10. Yeah. So we're about a point away from that. So if I'm trading it short term, what I'm doing now is I'm waiting for a bounce in the dollar to
sell
99. And then I'm selling at 99 with a stop at 100, and I'm looking for 95, right?
Well, I'd be happy if we got to your sell zone. I'd be taking partials. So from your lips, Dale, any view on oil? I know you follow oil.
I do follow
and
oil.
that gas has really been taking it on the chin, Dale. I have to think, and I mainly, everything I do is technical. But I do buy the narrative with all these data centers being built that that natural gas is the transition step because it'll take a while to get nuclear going. So I like the fundamental story. I don't like the technical action in natural gas, and I don't even like the action in crude.
Yeah, I haven't looked at crude for about a year, I would say, and was very disappointed sort of in the middle of last year when we didn't get an acceleration.
Yeah.
So for me, I'm not touching it. I'm not touching oil at all at the
Okay.
moment. And
Okay.
nat gas I rarely look at. But for me, that looks like five waves down, right? One,
Yeah.
two, three, four, five. So all this is a correction to that. So
Okay. We
it
can make new lows.
looks like it's headed lower. I'd be surprised if I mean, we might get down towards the lows, but one and a half, $1.50. Come on.
Because I
That
mean
that
these data centers, Dale, they're like, miles of property
yeah,
to fuel all these computers for
yeah.
AI.
Yeah, the only other
But
thing that I'll finish off on, Dale, is just coming back to the whole risk asset thing, right? You might get shakeouts, you might get pullbacks along the way, but with inflation sticky, with the Fed under pressure to cut rates, which is a mistake, with global money supply still strong, I think you have to be invested in risk assets. There's no room to be cautious because I don't think bonds are going to help you, right? I don't think bonds are going to be the safe haven that people think they are.
no. Do you
And
see
so,
another shortcoming if you pull up TLT?
yeah, definitely.
There's a count. I want to confirm this count with you. We could probably wrap it here, but um, that's TLT. So as I'm sure they're under pressure that we could perhaps get, if you could zoom in a little bit, that we get some type of ABC. Okay, there it is. Okay, so we could even attack and take out that trend line, head towards 90, and have that be that this whole thing from the lows, which was Moody's downgrade, that and at first rallies A, pullbacks B, and now we're in a C, and that it's going to be a great short. Yeah, I like that parallel channel. Where's it come in around 90, the blue line?
Uh, 89.
Okay, so
89. Well, obviously it's a rising trend line,
yeah,
so it
right,
depends on when you
90.
if you hit it at the end of August, it's going to be 89 and a half, something like that.
So do you think that's something to be stalking, paying attention to,
Yeah, I do.
since you still your outlook on rates is pretty bullish for rates. So okay,
Yeah, I think.
so we case this together.
Yeah, we did. Yeah,
It,
and
it,
next time I'm going to report you to the headmaster for copying my notes. So and
all
cheating
right,
and
yeah,
cheat and cheating with your camera.
I'm telling you, it's it's just some people have similar thought processes, and I think that's what attracted you to watching our show before you started coming on. Is that you saw some things that we were talking about that were things you were considering. So great. Like I said, kindred spirits. Appreciate you always coming here, Dale. I know you have no axe to grind. um, and that there's really no place for anyone to follow you besides when you're here, right?
That's right. I stopped posting on Twitter
Yeah,
about a year or
yeah.
so ago. It was just becoming too time consuming. I occasionally post on LinkedIn.
Okay,
Yeah, I've posted once or twice on LinkedIn in the last couple of months, and it's when I have a very substantial view about something. So
okay,
I think I posted about the dollar low. I think before that in April I posted literally the Friday before the low on the Monday in the stock market saying wait for a spike in the VIX to 60 and then basically go all in on equities. So when I have a very strong opinion about something, then I'll post. So if people want to follow me on LinkedIn, that's fine.
okay. And this video that we produced today, guys, you could always come back to it on our site and review it, because as things progress towards the fall and end of year, a lot of these ideas that were discussed that aren't ready to go yet, the setups that we've talked about may not be today, but just something to keep in mind. So, Dale, really appreciate you sharing your wisdom with us and edifying our community and me with your looks that reinforce some of the things I've been thinking about and open my eyes to things I wasn't even considering. So, appreciate what you bring to the table every time you're here.
It's my pleasure, Dale. As I've said before on a number of occasions, I'm very happy to share with you guys in the community. It's part of me trying to give back my experience over many decades, and if that can help somebody, then
Yeah,
if that's the case.
yeah,
One caveat, Dale, is that just please bear in mind that I'm human. I'm not an AI robot. I'm only right historically about 62% of the time. So if you like one of my ideas and you follow it and you lose money, it's not my fault. Okay.
yeah. It's trade what I tell people do their intelligence gathering, but not just to take trades blindly from anyone. It has to line up with your work and your risk tolerance, etc. So there's our disclaimer.
Yeah,
So
absolutely.
yeah,
It's
okay,
all about time frames. It's
yeah,
all about risk management, and it's
yeah,
about diversification.
leverage, all
Yeah.
those things. So Dale Briscoe, have a great rest of the summer, and look forward to talking to you probably be in November. So we'll see what's happening this fall. A lot of things
Okay.
probably will be achieving certain, I'm sure there'll be something happening in November, and it's not going to be the way things are sitting right now. That's for sure.
Well, I
So
think given all I've said about equities and risk assets,
yeah,
I think that we may see volatility pick up between now and when I'm next on.
okay. You think 7K 7,500 is doable in S and P's?
Not in the short term. I think
Okay.
if we hit 65, 6,600 on the S&P, I'm going to be taking some money off the table and probably buying some protection.
Okay. Okay. Some people are talking 68 at some equality measure. All right, Dale. Well, thanks a lot, buddy. It was great talking to you. You
My
made my
pleasure, Dan.
week. All right. Dale Briscoe.
All
Dale
right, Dale.
Briscoe, everybody.
Thanks,
Um,
Dale.
watch this again. You're very welcome, Dale. And that's a wrap for me, everyone. You could join the team in about 8 minutes on the morning edge. So don't be standing on the ledge. Just get into the morning edge and see what the guys are doing today. You're welcome, everybody. People are thanking you, Dale. And that's going to be a wrap. Don't just count your pips, count your blood.